Well, it's shaping up to be another steady day on the local market, with little being offered in the way of overseas leads. Trading floors in both the UK and US were closed overnight for public holidays, but local investors have plenty to consider, with M&A activity remaining in focus. Business reporter Chris Kohler joins me now for more on the markets. Chris, look, it's looking pretty flat, I guess. If you want to be a glass half full, it's looking nice and steady.
That's right. Look, Tom, we did expect it to be pretty flat today on the local market. As you mentioned, a long weekend being taken in both the US and the UK. But actually, things are looking pretty good. We're up about 0.6% now on the local market, 6,489 points on the 200. Now, most, if not all, of the heavy lifting is really being done by the materials section. We're seeing a multi-year high from Rio Tinto, up as much as 4.3%. Now, that's closer to 3% now, but still a very healthy start there from Rio Tinto. BHP Billiton also about 2%. The banks are pushing higher, between 0.5% and a full percent. So, look, you can't actually one more thing on that. You can't have all winners and no losers. It seems like Domino's Pizza is the one getting kicked around a bit today, down as much as 7%, multi-year lows being hit there. Now, for a little bit more on what's happening on the local market, Julia Lee, equity strategist at Bell Direct, is with me now in the studio. Julia, thanks very much for being with us.
Pleasure.
Now, no offshore leads, and yet here we are pushing higher. It's all about materials section. What do you make of that?
Well, iron ore is such a fascinating thing. It's the key ingredient in steel making, and some of the numbers that we are seeing in terms of steel output are very positive for the sector. In fact, in April, we saw global steel output up by 6.4%. And in particular, it's China that's important for our iron ore miners. And China's output was up by 13%. Add into the picture that it looks like inventory at the Chinese ports are quite low, which means the Chinese will need to buy soon. And our iron ore miners are just on a tear. Rio Tinto's up by about 3%. That's the highest level that we've seen in a decade for Rio Tinto. And don't forget that Fortescue, just in 2019, in the year to date, is up 120%.
Wow, still, I mean, as you say, iron ore still well above $100 a tonne. The outlook's looking very good, but that decade high, does that say to you now is possibly a good time to take some money out of Rio Tinto?
These things tend to go on a bit longer than people actually expect, and I guess that's the thing with markets. One thing to be watching is the supply side, because one thing that's constraining iron ore at the moment and helping prices is the fact the Brazilian miner Vale had that disaster in Brazil. Once we see that production coming back online out of Brazil, that will probably put a cap on prices. But for the time being, it's great news for the Aussie iron ore miners.
It certainly is. Now, looking elsewhere to something not so positive, Domino's Pizza, as mentioned before, hitting some quite lows there, down 20% this over the last 12 months, as you pointed out to me before, Julia. Now, look, some downgrades happening from analysts there. Do you share the opinion that the best is behind Domino's for now?
Chris, I mean, who doesn't like pizza? But unfortunately for Domino's, it looks like they've already hit peak growth. We've seen a decade of double-digit gains. Now, Domino's is not just a pizza company here in Australia, but they also have operations in Japan and Europe. And Europe in particular is the weak point for Domino's at the moment. So it doesn't look like they're going to meet their full-year targets, and that's why brokers have become increasingly negative on the stock. And today, one of the worst performers, down 5%.
Yeah, going cold, as it were. Now, some of the biggest news overnight was that in the car maker space, Renault potentially, there's some suggestion that there could be a merger, a 50-50 merger between Renault and Fiat Chrysler. Now, this boosted the European markets. Do you think that that's kind of a signal there for the shape of M&A around the world, and does it mean anything for us here in Australia?
Look, markets have been fantastic, but as earnings growth becomes harder to find, I think we'll see a lot more merger and acquisition activity. That is, companies combining to try and find a growth in a lower growth environment. I mean, looking at these two car makers looking to combine, it would make the third largest car maker in the world. And we did see European markets higher. The German DAX was up by 0.5%, so 0.5%, and the French CAC was up by 0.3%. And I guess it just shows you that the hunt for growth globally is on. Yesterday, we saw a Swedish private equity company interested in an Australian telecommunications company, Vocus, and it just shows that really this hunt is global, and we're going to see our global companies coming to Australia trying to find opportunities.
Absolutely, yeah, we certainly saw Vocus shares shoot higher yesterday on that news. Now, looking from Europe to Japan, where Donald Trump is right now, I mean, look, everything that happens, it seems, right now in terms of global markets comes from the tweets of Donald Trump. Now, a market's doing a pretty good job at the moment of deciphering what's to be had from the US-China trade dispute right now?
Well, I guess the good news is that tensions haven't intensified, but I guess some of the comments from President Trump overnight, the markets have been watching closely, saying that the US could have a deal if they wanted to, that China wants a deal, but that the US just isn't ready. And that makes this G20 meeting over in Japan next month extremely important. The two leaders are expected to meet, and the markets are going to be watching just to see how close they are to a deal. I mean, this week we will get some measures of manufacturing out of China, and that's going to be a key to see how much these trade talks have actually hurt China's economy.
And just for the Australian investors looking at the ASX 200, I mean, what are the sectors most likely to be thrown around if there is bad news to be coming out of that next meeting?
Well, obviously, our iron ore sector is very much in focus, as is the Aussie dollar. And look, the Aussie dollar has been about 69 US cents at the moment, which has been great news for those global exporters which are listed on the Australian share market. And also, if companies want to shop in Australia, well, Australian assets are looking pretty cheap with the Aussie dollar where it is.
Absolutely, yeah. We certainly did think it was going to be a quiet day, but it's looking pretty positive. As I said before, about 0.6% at 6,489 on the ASX 200. Tom, back to you.